In this video, I will discuss something that nobody wants to deal with, that is CRA audit. And we all know CRA audit can be stressful, time consuming and headaches. While CRA audits are random, most CRA audits are triggered by avoidable mistakes of business owners. So in this video, I will share some very simple strategies that you can follow and avoid or reduce the chances of being audited by CRA. Hi, I'm Jamal Abbasi from Source Accounting Professional Corporation, your Canadian tax partner. First question is whether CRA can audit you. The answer is yes. CRA has authority to audit any taxpayer and ask for the backup and documentation to support that thing. But fact is that CRA has very limited resources and they cannot audit everybody. So they use their resources very selectively and carefully. And fact is that most audits are caused by a red flag, that is caused by the mistake and discrepancies on the part of tax filer and their tax return. So now let's discuss some of the key factors that may trigger CRA audit. First important thing is inconsistent or error in reporting. For example, if you are reporting a certain number in T4 slip, if that doesn't match with the employment expense reported in corporate return, that may certainly trigger an audit or inquiry from CRA. Similarly, corporate return and HST return should match when it comes to the figure of sales. If you are reporting one number of sales in HST return and another number in corporate return, it may a clear trigger for CRA audit. Another trigger may be claiming too many expenses. If you are claiming too many expenses which doesn't match with your business profile, CRA may certainly pick up your file for audit. One more factor is big fluctuation of expenses from year to year. If your revenue is not increasing and your expenses are increasing from one year to another year, CRA may again pick up your file for the audit. Other factors that may trigger CRA audit is continuous claiming losses or continuously claiming refund in HST returns. Similarly, if your numbers are not matching with the industry trend, that may lead CRA to audit your business. So far, we have discussed some key factors that may trigger CRA audit. Now let's discuss some of the tips that will help reduce chances of being audited by the CRA. First, most important thing is the filing of returns, whether corporate tax return, HST return, or other information slip, timely and accurately. Once you report information timely to the CRA, your chances of being audited are reduced. Second thing is report your information accurately and make sure that you are including all information. Especially if you have T4 slips and other slips with the CRA, make sure that those numbers match with the number that you are reporting your return. Otherwise, if this number doesn't match, CRA will definitely pick up your file for the audit and you will be facing CRA audit. Be very reasonable when it comes to claiming expenses and ITCs. Don't claim unreasonable expenses. Remember, CRA has extensive database of industry trend and companies, and they can very easily determine what expenses are not in line with industry trend. And if your income or expenses are not in line, they can easily pick up your file, and that way you are triggering or inviting CRA audit yourself. When you are filing, as we discussed before, make sure that your different returns are consistent with each other. For example, your sales in corporate tax return should match with the sale that you are reporting in your HST return. Similarly, wages expense or salary expense that you are reporting in your corporate return should match with your payroll slip, T4 slip that you are filing with the CRA. Next important thing is pay your dues timely. Once you pay your dues timely, mostly your file will be closed and chances of the audit will be reduced. Even if everything is correct, CRA has authority to audit you, as some audits are random and some are triggered by red flags. If they audit you, only thing that will save you is the backup of your expenses and income. So this is critically important that you keep backup, which is receipt and invoices of all your expenses. And sometimes business owners are in incorrect impression that when CRA audit them, they will produce and they will show them the bank statement and credit card statement, and they will be good. Please note that CRA does not accept credit card and bank statement alone as the proof of expenses. They need invoices and expenses. One important tip that I want to share with you is a very common advice, that stay organized. Use some accounting software like QuickBook, Sage, or any other accounting software, because once you are organized, you are clean, you have a proper record keeping, even if CRA audit you, you are in a very better position to handle that audit. One more advice is to keep your finances, personal finances, separate from your business finance. It is highly recommended that you open a separate business corporate account or business account and keep all your personal finances separate from this business account. Many business owners ask whether they need to submit receipt and invoices at the time of tax filing. The answer is no. In Canada, taxation system is based on self-reporting, meaning that you report information from your own system and CRA accept it as it is. However, CRA has authority to ask you to validate and substantiate those expenses or income that you have reported in the income. So you always need to keep all the invoices and expenses receipt ready with you in case CRA asks them to see. As we discussed initially, CRA audit are stressful and full of headaches even if everything is correct. So it is always highly advisable that you seek a professional advice to help you in CRA audits. I hope you found this video helpful. We have detailed article on this and other related tax topics on our website. We are leaving links of this article in the description. And finally, feel free to call Source Accounting Professional Corporation if you need any tax advice.